Good morning, and welcome to today's episode of Crypto Daily. We're excited to dive into the latest news and trends shaping the world of cryptocurrency. I'm joined today by my co-host, and together we'll be exploring the biggest market-moving stories.
That's right. And what a day it is. We're seeing some parabolic crypto rallies that are giving us flashbacks to the pandemic boom that burst. It's a wild ride out there, and we're here to break it down for you.
Exactly. The current market sentiment is eerily reminiscent of the 2020-2021 crypto boom. We're seeing Bitcoin and other major cryptocurrencies surge in value, with some altcoins experiencing gains of over 50% in the past week alone. It's a decisive shift in momentum, but we have to ask ourselves, is this sustainable?
Well, history has a way of repeating itself, and we all know how the pandemic boom ended. But for now, let's focus on the present. What's driving this rally, and what are the implications for investors?
From what we're seeing, it's a combination of factors. We've got institutional investors pouring into the market, coupled with a renewed sense of optimism around the potential of blockchain technology. And then there are the whales, large-scale investors who are moving massive amounts of capital into the market.
That's right. The whales are back, and they're making waves. But amidst all the excitement, there are still concerns around the stability of the market. Speaking of which, the Financial Stability Oversight Council, FSOC, just released its 2024 annual report, and stablecoins are once again in the spotlight.
Yes, FOC is so worried about stablecoins, and for a good reason. The report highlights the ongoing risks associated with stablecoins, particularly around liquidity and investor protection. It's a timely reminder that despite the current market euphoria, there are still underlying concerns that need to be addressed.
Absolutely. And it's not all about the serious stuff. We've also got some fun news to share for all you gamers out there. We've got an update on Captain Tsubasa Kabaza, Rival, the Telegram tap to earn game. Today's daily combo solution is out, and we'll give you the lowdown on how to earn those free balls. However,
because who doesn't love free balls? But in all seriousness, games like Captain Tsubasa Rivals are an interesting example of how blockchain technology is being used to create new and innovative experiences. We'll explore more on that later in the episode.
That's right. And we've got a lot more to cover, from market analysis to expert insights. So stick with us as we dive deeper into the world of cryptocurrency and explore the trends that are shaping the future of finance.
As we were just discussing, market performance has been quite volatile lately, and it seems like some assets are feeling the pressure more than others. The latest CoinDesk 20 performance update shows Polkadot taking a hit, falling 5.1% as the index declines from Thursday.
That's right. And it's not just Polkadot. Litecoin also underperformed, falling 3.8%. It's interesting to note, though, that 6 out of 20 assets are trading higher. Leaders like Uni and Render are seeing significant gains, with Uni up 5.8% and Render up 5.8%.
Those gains are definitely noteworthy. But what's also catching my attention is the performance of Ether. It's just hit $4,000 for the first time since March, and it seems like there's a surge in U.S. institutional interest in the token.
That's right. The Coinbase premium is higher than on Binance, which suggests that there's a strong demand for Ether from EU.S. institutions. And it's not just the price that's seeing a bump. Active addresses on the Ethereum network have also increased sharply.
This is building on what we discussed earlier in the week about the growing adoption of Ethereum. It's clear that institutions are taking notice of the network's potential and is driving up demand for the token.
Absolutely. But while we're seeing this growth in the crypto market, there are also some concerning developments on the regulatory front. Coinbase has obtained letters from the FDIC that show the regulator has been instructing banks to avoid crypto.
So that's right. Paul Grigwald from Coinbase says this is hard evidence that the industry hasn't been spouting conspiracy theories about being shoved out of U.S. banking. It's clear that there's a disconnect between the regulatory environment.
Exactly. And this is speaking to the larger theme we've been discussing about the need for clearer regulations in the crypto space. It's going to be interesting to see how this develops and how it impacts the market in the coming weeks.
Definitely. We'll be keeping a close eye on this story and bring you updates as more information becomes available. In the meantime, it's clear that the crypto market is continuing to evolve and grow despite the regulatory challenges it's facing.
Right. And as we head into the weekend, it'll be interesting to see how the market responds to these developments. We'll be back on Monday with more updates and analysis.
So we've been seeing governments around the world trying to figure out how to regulate crypto and AI. Earlier, we discussed the challenges of balancing innovation with consumer protection. Now it seems like the Trump administration is taking a different approach.
That's right. Trump's crypto AI czar, Sachs, has been a longtime critic of tech regulation. This appointment could signal a shift towards a more hands-off approach to regulating crypto and AI. But it's worth noting that Sachs has also been a vocal advocate for clearer guidelines, so it's not entirely clear what this will mean for the industry.
Is building on what we discussed earlier about regulatory clarity, it's interesting to see how different governments are handling this. In the UK, for example, the financial regulator has been cracking down on unregistered crypto firms. We just saw Solana meme coin launchpad Pump.fun ban UK users after receiving a warning from the regulator.
Yeah, that's a great example. Pump.fun banned UK users are affected. Elon confirmed that this is a permanent measure and only UK regulator is taking a tough stance on registered crypto firms. But it's also worth noting that this could drive innovation to other jurisdictions with more lenient regulations.
Speaking of innovation, it seems like Ether is getting a lot of attention lately. Record-chasing ETF investors are piling in, and it's clear that Ether is becoming increasingly popular. What do you think is driving this trend?
Well, I think a part of it is the growing adoption of decentralized finance, DeFi applications. Ether is the primary currency for many of these apps, so it's natural that investors are becoming more interested. Additionally, the upcoming Ethereum 2.0 upgrade is expected to improve scalability and security, which could make Ether even more attractive to investors.
That's a great point. And it's worth noting that this increased interest in Ether could also be driven by the growing awareness of crypto and blockchain technology in general. As more people learn about the potential benefits and uses of crypto, we're likely to see more investment and innovation in the space.
Absolutely. It's an exciting time for the industry, and we'll continue to follow these developments and bring you the latest news and analysis.
Building on what we discussed earlier about the growing institutional interest in Bitcoin, it's worth noting that U.S. spot ETFs have just surpassed a major milestone. They now hold more Bitcoin than Satoshi, with over 1.1 million BTC in their possession.
That's mind-blowing growth, especially considering these ETFs are still in their infancy. It's a testament to the increasing demand for Bitcoin from institutional investors. I mean, who would have thought that these ETFs would hold more Bitcoin than the mysterious Satoshi?
Exactly. And it's not just the quantity that's impressive, but also the speed at which they've accumulated it. It's a clear indication that institutions are taking a long-term view on Bitcoin and are willing to invest heavily. Actually, let me tell you, by the way, have you seen the reaction from the crypto community on this news?
Yeah, I've seen some comments from prominent figures like Eric Balchunas, who's been tracking the data. He's calling it mind-blowing growth. And I think that's an understatement. This is a significant development that could have far-reaching implications for the crypto market as a whole.
Speaking of regulatory implications, there's been some news on the memcoin front. Pump.fun, a popular memcoin factory on Solana, has banned UK crypto traders from accessing their platform. This comes after the UK's Financial Conduct Authority warned that Pump.fun was operating without permission under EU SSE's control. And it was close, not close, and the bit
that needs to be addressed supersededly. That's not surprising given the regulatory scrutiny that memcoins have been facing lately. It's a reminder that even in the wild west of crypto, there are still laws and regulations that need to be followed. I'm curious to see how this affects the memcoin market, which has been known for
relatively high prices. If you want to support the work I do and the brand I love, set up my own crypto research firm is getting into Dogecoin mining. They're expecting to generate revenue and profitable cash flow by early January 2025.
That's great news for Dogecoin enthusiasts. And it's also a positive development for the environment. As we've discussed before, the energy consumption of crypto mining has been a major concern. It's good to see companies like Vivo Power exploring sustainable solutions and investing in renewable energy.
Absolutely. Yeah. It's a win-win for both the environment and the crypto community. As, the demand for sustainable energy solutions grows, we can expect to see more companies like Clay Vivo Power entering the crypto space. It's an exciting time for crypto, and we'll continue to keep an eye on these developments.
We've had quite the day in crypto news, from Bank of America's Michael Hartnett warning about froth building in U.S. stocks and crypto, to Janet Yellen cautioning about risks in commercial real estate and crypto. It seems like everyone's on high alert.
That's right. Hardenhout specifically mentioned that the current rally in stocks and crypto is largely driven by sentiment rather than fundamentals. It's a concerning sign, especially given the recent bounce we've seen in the markets.
And Yellen's comments only add to the concern. She's warning that the financial system still faces significant risks, particularly in commercial real estate and crypto. It's a stark reminder that the regulatory environment is still very much in flux.
Exactly. We've been discussing the regulatory landscape all week, and it's clear that there's still a lot of uncertainty. The latest revelations, legitimate one from the FDIC, only add to that uncertainty. Coinbase is claiming that newly disclosed letters prove the existence of an anti-crypto operation dubbed Operation Chokepoint 2.9.
But do these letters really prove anything? It seems like Coinbase is trying to spin this as vindication, but the reality is much more nuanced. The letters simply revealed that the FDIC has been communicating with member banks about crypto, which isn't exactly a surprise.
That's right. The real question is what exactly the FDIC is communicating. Is it actively discouraging banks from working with crypto companies, or is it simply providing guidance on how to navigate the regulatory landscape? We need more clarity on that front. Yeah.
And that's the problem. We just don't have enough information yet. The crypto industry is still operating in a gray area, and that's creating a lot of uncertainty for investors. Until we get more clarity from regulators, it's going to be tough to shake off the volatility.
Absolutely. So what are our key takeaways from today's news? First, the regulatory environment is still very much in flux. Second, the markets are looking frothy and sentiment is driving the rally rather than fundamentals. And third, we need more clarity from regulators before we can start to feel confident about the future of crypto.
And what about our market outlook? It's tough to make predictions in this environment, but it's clear that the next few weeks are going to be crucial. If we can get some clarity from regulators and see some positive developments on the adoption front, we might see a sustained rally. But if the uncertainty continues, we could be in for a bumpy ride.
That's right. As always, we'll be keeping a close eye on the markets and bringing you the latest news and analysis. Thanks for tuning in, and we'll catch you tomorrow.
And don't forget to follow us on social media for the latest updates and insights. Until next time, stay informed and stay ahead of the curve.